Namaskaram. So next clause is to clause number 26 under Form 3CD, which talks about section 43B disallowability as well as allowability under section 43B. Section 43B, my dear friends, it's override. This particular section, it overrides the concept of accrual or mercantile. Ideally, whatever is there in your profit and loss account, whatever expenses and income, technically expenses, they are allowed as and when they are accrued. Okay, if you are following the mercantile system, because 95% plus assessee, they are following the mercantile system, accrual system. So the moment the expenditures are incurred, it will be allowed as a deduction. So outstanding salary, the salary which was not paid before 31st March will be allowed as a deduction. Outstanding rent will be allowed as a deduction. Outstanding electricity bill will be allowed as a deduction. So all the expenses will be allowed as a deduction even if they are unpaid during the previous year. But there are certain expenditures for which government is too concerned. We call it TBLICR. Okay. Taxes, bonus to employee, then leave encashment, that is on retirement we give the leave encashment. I means interest, but interest from banks where public's money is involved, or government stake is involved, those banks. C means employer contribution to various funds, superannuation fund, gratuity fund, PF fund. R means payment to the railways. If you are doing advertisement with railways, you are making payment to the railway. So these are some expenses which are there in section 43B. So here government say, because our interest is directly or indirectly involved here, or for the benefit of the employees, we will give you the deduction only and only when these expenses are paid. So we always say under section 43B, expenses are allowed on payment basis. That means it is overriding the principle of accrual. Although expenses are incurred, we will not give you the deduction in the year when it is incurred. We will give you the deduction in the year in which it is paid. Now, one misunderstanding about section 43B. People say that we have to pay expenses during the previous year. Answer is no, you are not supposed to pay during the previous year. If you have incurred the expenses during the previous year, then you will not get only time to pay during the previous year, but up to the due date of filing the ROI. Up to the due date of filing the ROI. ROI due date is given under section 139(1). Normal assessees due date is 31st July, but we are talking about audit assessees. So here the audit for audit assessees, the due date is 31st October. And 1 month prior to that, the audit report will go. And that's the reason you should understand, as per my understanding, you must pay this expenditure before 30th September. Otherwise, your auditor will put the remark in particular clause. Yeah. So before filing the ROI, you are supposed to pay. So you can pay in the month of April, you can pay in the month of May, June, July. All these months are available to you. If expenses were incurred during the previous year, you can either pay during the previous year or before filing return or due date of return under section 139(1). This is the thing. So what disclosure as an auditor you are supposed to do here? What type of focus you need to have? Now first of all, I will talk about this. Any expenses which was incurred during the previous year. So it's expenses belonging to the previous year. Now what did I tell you? You are supposed to pay either during the previous year or till the filing of return. Look at that. Paid on or before the due date of furnishing the return of income of the previous year under section 139(1). So before filing of return or due date of return, you are supposed to make payment of that. Not paid before offer set date. If you have not paid this particular expenses on or before this date, then what will happen? Then in that previous year, this particular expenses will be disallowed. Sir, is it permanent disallowance? Answer is no. This is the temporary disallowance. What do you mean by temporary disallowance? It will be disallowed during this previous year, but subsequently, as and when it is being paid, in that year, it will be allowed as a deduction. So as an auditor, you are not only supposed to do the reporting in the year in when it was incurred, you are also supposed to do the reporting in the year in which it was paid. So if it is pre-existed on the first day of the previous year, that means this expenses is not belonging to that previous year. it belongs to some other previous year in which it was not paid. Pre-existed on the first day of the previous year but was not allowed in the assessment year of any preceding previous year and was paid during the previous year. If you have paid during this year, then you have to put the comment, yes, it was paid in this year. If it is not paid in this year, then obviously here the assessee will not get the deduction, but at least the reporting will happen that okay, it belongs to 17-18, but still it is not paid. Okay, so this is how it is. So you are supposed to do the reporting on two aspects here: any expenses which are incurred during the year, and any expenses which was pre-existed on the first day of the previous year. That means it is belonging to preceding financial years. You are supposed to do the reporting on the both of the items. What are the general items which are covered here? State whether sales excise, custom duty, excise duty, any other indirect taxes, import duty and impost, etc. is a pass through the profit and loss account. So you have to tell them whether you are passing the entry through profit and loss account or not. Look at this. What are the auditors checklist? Obtain from the assessee particulars of tax, duty, sales, fee, other sum of amount paid or provided for. Identify following kind of taxes, duties, sum covered under section 43B. Fees, cesses, contribution to any other welfare fund, contribution to gratuity fund, contribution to superannuation fund, corporation contribution to provident fund, municipal and local taxes, sales tax, excise duty, any other taxes under any other law. Obviously we are not talking about income tax, we are talking about indirect taxes, business taxes. Interest on loan on borrowing from the financial institution or state financial corporation, state industrial investment corporation. Even NBFC and scheduled banks are covered here now. NBFC and scheduled banks are also covered now. Okay, then interest on any loan or borrowing from scheduled bank, yes. Okay, verify the payments with the challans or receipt. They are saying yes, we have paid the interest, we have taken the loan, we have paid the interest, and that's the reason we deserve the deduction under this particular section. Check the ledger account of above mentioned taxes, duties, etc. Verify the correctness of the particulars furnished by the assessee. So these are the things that you are supposed to do. Then not only that, my dear friends, we have to tell them in which year this particular expenditure were paid and these taxes whether they are passing through the profit and loss account or not. That we will discuss in the next clause. The next clause is about indirect taxes only. So there I will show you the treatment. Now one thing, many of the students don't know exact logic behind it. So what's the logic, my dear friends? Why government is giving deduction on payment basis? So a very famous case study that everybody knows, that Kingfisher Airlines and the promoter of the Kingfisher Airlines is Mr. Vijay Mallya. Okay, so in a sarcastic sense we say Mr. Vijay Mallya has borrowed around 10,000 crore loan from Indian banks, and even if you apply 10% interest, that means he is incurring 1,000 crore interest every year, but he is not paying it. What's the attitude of Mr. Vijay Mallya? He says, paying interest is not my principle. Paying interest is not my principle, and paying principal is not in my interest. Hence, I neither pay interest nor principal. Now, there are so many industrialists like that, so many business people like that who have taken the loan from the public financial institution, state financial institution, state industrial investment corporation, Indian scheduled banks, NBFCs, and they are not returning the loan along with the interest. Now, if they claim deduction of interest without paying it to the profit and loss account, so don't you think they are getting the benefit of tax shield? And that's the reason we are telling them, no, you want to claim the deduction, you are supposed to make the payment first of all, and then only you will get the deduction. That's the reason section 43B disallows certain expenditure in which public interest at large is vested into. Obviously, taxes is one of the common aspect here. And when I say taxes means it is indirect taxes, business taxes, which are otherwise allowed as a deduction. There is no deduction for income tax in income tax. Yeah. So section 40A directly disallows the income tax payments. Yeah. I hope you understood the section 43B clauses. Please look at the expenses which are covered by 43B and have the appropriate comments in your 3CD audit report. Thank you.